Thank you, everyone, and welcome back. Now I'm going to show you one of the more important aspects of AIM, and that is how to find good LEAPS at good prices when you want to buy a new one. So I'm going to go to Yahoo Finance and show you the tricks in Yahoo Finance that show you an amazing way to do it.
Okay, Jeff, I think I'll make you the host again. Do you have Yahoo Finance up on your screen somewhere?
No, I don't.
Okay, how about you launch that first?
Okay, hold on. Figure out how to do it here. All right, yeah, here we go.
We also, to let everyone know, we do have presentation slides that have some screenshots of this, which we will go to, I think, later after Jeff gives a live demonstration.
Okay.
That's our backup also.
Okay. Yeah.
You let me know when you're ready.
Okay. I'm almost ready here.
I missed the chat. There's some chat items here, perhaps.
I'm getting a black screen. Okay, that's not what I want. Okay, I don't know what I'm doing here. Okay. I'm not seeing my main screen here.
For Zoom or for the web browser?
I'm just seeing a white screen now. Okay, I don't know.
Well, how about this? Let me, I'll make you the host.
Make me the host, yeah.
And then you can share your screen and then we'll figure it out.
That's the better plan, yeah.
Okay, you're the host.
All right. Okay, I'm going to Zoom. Okay, I'm still seeing you as a postage stamp and me with a white blank screen.
Okay, can you get to a, do you see the Zoom control window with the share screen button?
Okay, nothing happens when I click on the Zoom control.
That's fine. How about share screen? Green button, do you see that?
No, I don't. All I see is a postage stamp of you.
Okay.
In the right corner.
Okay, remember I talked about the black banner at the bottom of your screen?
Yeah.
Pictures, go down there and click on the Zoom blue circle.
Okay, I'm clicking on it and nothing, and all I see is the same thing I just saw.
When you click the blue Zoom circle?
Yes, I'm clicking the blue Zoom circle, and all I see is I see your frozen image with a up arrow, microphone, camera, and exit, minimize video, stop video, hide video. I don't see anything.
Okay.
Nothing happens.
How about on the top of your screen? Do you have a Zoom menu?
I have no Zoom menu anywhere on my screen. All I have is the Zoom button at the bottom, and it won't do anything. Oh, wait, hold on. Something happened. Okay, the best I can do is when I go to the bottom, there's a blue Zoom at the top, and then my screen comes up. But the moment I move my mouse from the Zoom button, everything goes blank again.
Let's see.
Jesus. Here, let me.
Somehow we want to find the share screen button for you.
Yeah. I don't know how to find it.
How about this? Can you minimize whatever else you see on your screen? You know how to do that?
I have no controls in the upper right corner for minimizing. All I see is you and blank white screen. I can't make you big. If I click on the postage stamp, I don't see, maybe I'm not connected to Zoom. I don't know.
You're with us still.
But I don't see anything.
Hmm.
I see a white blank screen.
Tell me that white blank screen. What do you mean?
Everything. I see your postage stamp in the upper right corner, like you'd see on a letter, and the rest of my screen is completely white, no language at all. And at the bottom of my screen, I see a few. Here, let me see if I do something here. Okay. Did I do something right?
Hmm.
Now I get a white, now I've been able to get a black blank screen. Hold on. Nothing happens, Brett. I don't know what to do.
Hmm. I wonder, can you hide that blank screen? Maybe there's something behind it.
There's nothing I can, there's no control. Let me try.
This is when we
I can't do anything. I have nothing. I have no controls here. Hold on. The only thing it'll let me do, I can open mail. Well, no, when I click on open mail, I get a black screen. Here. Let me see if I.
maybe your computer is unhappy now. I don't know. This sounds like
Okay, wait a minute. I got something here. Okay, I got the Kingston file to come up again. Hmm. See.
all right. Appreciate your patience, everyone.
Yeah, sorry about that. But
Your
technology sucks. What can I say?
can we
Yeah, I'm getting something on my screen, but I can't. I don't
is your I assume your daughter's not available nearby?
know.
Hmm.
I don't think she is.
Well, one option, if we can't figure this out, Jeff, is for you to leave the meeting and come back in, and maybe that will fix things. Oh, yeah, somebody said look for 3 dots, I think. Yeah, on your own window, Jeff, can you find 3 dots? Find your own video?
What? No,
Can you see
I don't
yourself
see
anywhere?
3 dots anywhere.
Jeff, do you see yourself anywhere on the screen?
No, I have no images of anybody attending the course. I just see the frozen image of you against a bunch of against a lake and a bunch of trees.
Right, that's my icon. I see
You want me to try exiting minimize video? Maybe that. Okay, now I got you. I
yeah,
got you full screen and I see the names and some of the images. Okay, you
okay.
want me to try share screen?
Can you find yourself? Yeah, if you see share screen, do you see that?
Hold on here.
Do you see share screen
Yeah,
at
I
the
see
bottom?
me now. Okay, I'm clicking. I clicked on me and now I'm back on the screen.
Okay. Do you see
Okay,
share
now
screen at the
how
bottom?
do I get to Yahoo Finance?
Do you see share screen at the bottom?
Yes, I do.
Okay,
Click on
start
that.
that. Start that. Yeah. And then
Okay.
hopefully we'll find a browser. Then we can see what you're doing.
Nothing. Okay.
Do you have a browser open yet anywhere for a web browser?
No.
All right, well then
Wait a
you
minute,
should.
hold on. Oh God.
I thought we opened it up
Well,
ahead of time, Jeff.
well,
Didn't you have it open
how
ahead?
about this? Can you do screen share and you open Yahoo Visor and
Sure, we could do that.
then maybe I can just talk about it. I can tell you what to do. This is ridiculous.
Okay.
Okay.
All right, let me go.
Again, I'm not seeing anything. Okay. I'm still seeing, all I'm seeing is a black screen.
Hmm.
I see nothing from Zoom.
Okay, here we go. Okay, so I need you to make me the host again. Can you find my picture?
Yeah, hold on. Yeah, let me. Okay, I got your picture. There's the three dots. Is that what I want?
Yep, 3 dots and then make host.
Make host. Okay. Yes, I changed you to the host.
Okay, let's see. Good. I'm the host. Okay, here we go.
Yeah, just pull up yahoofinance.com.
All right, here we go.
All right.
Okay.
Sorry for the interruption. You see why I like doing technology on paper spreadsheets.
Okay. We'll at the next break.
So
If we,
now
all right.
we're in Yahoo Finance. Okay. Okay, now I want you. I don't see the. Okay. Okay, Brett, go to quote lookup and type in Apple AAPL. And then click on that. Click on it.
I did.
But maybe you have
Here
to
it comes.
double click. Okay, then scroll down a little. All right, so here's my, okay. Whenever you open Yahoo Finance, you see how the 1D is in blue or bold. It defaults to 1 day, which we don't want. So go across the top and click on YTD, which is year to date. And now you see a chart showing how Apple has worked and gone up basically in price for the last year. And when you look at the last month or so, you see the drop off. Now, Brett, put your mouse at the top of the peak right there. Notice how since July 31st, Apple has fallen from $196 to $178. So I use that as an indication to me, since I love Apple and it's worked for 20 years making millions for people. This is a good time to consider buying Apple. Now, scroll down a little and I'll show people some more tricks here. Scroll down. Okay. I love the first column with Apple. Here's one thing I'm always looking at. Look in the first column, about near the bottom, you see 52-week range. You see the price, the 52-week low is $124, and the 52-week high is $198. That's very good high-low difference for a quality stock like Apple. So I like that. Okay. So now we're going to look at the LEAP. So go back up and click on options at the very end of the row there. Okay. These are what are called option chains. Okay. Now, it defaults to the shortest term options. We want LEAPS. LEAPS right now are the January 17th, 2025 options. So go in the date box, you see right there. Click on the down arrow and scroll down and look for the January 17th, 2025 options. Okay. Now, I like to buy options at or near the money. So scroll back up for a second, and we'll see the price is right now about $178.61. So right off the bat, want to look at the 175 call option and see what the price of that is. So scroll down again, and we'll look for the 175 call. That's weird. Why did they do that? Okay. Here's the 175. Okay, you can look at this and see the bid is 30.30. The ask is 30.95. And on Friday, Apple gained $1.60 and gained 5.54%. You can, next to it, you see 335. That's the number of contracts that traded on Friday. And now you look at the next column, and you see 5,966 contracts are owned by investors. That's a good number to own. Anything over 1,000 makes me very happy, and I look at it, and you can see the implied volatility is 35%, which is low, which means it doesn't radically go up or radically go down most of the time. Okay, this would be one I'd consider. Now, it's very hard to know the actual current price you're going to pay for an option. The best way to do it is this. If you add the bid amount of $30.30 and the ask amount of $30.95 and divide by 2, you have a very good idea of what you would actually pay if you placed a market order. What I suggest when you initially buy an option, I want you to own it quickly. This has a bid and ask close enough that I would not worry by putting in a market order. Roughly think of it as this. If you add 30.30 and 30.95 and divide, the difference is 65 cents. If you add 33 cents roughly, you would be paying around $30.63 or a little higher to buy that option. Now, as you'll learn tomorrow, when you're doing regular AIM, I recommend that you buy at least 15 contracts. So if you bought 15 contracts of Apple at, say, $30, you're going to pay $45,000 to own 15 contracts or 1,500 options. Now, Apple is so good long-term, I think you can cheat a little on the cash, and you wouldn't necessarily have to put in $45,000 cash for a total investment of $90,000. You could put in less, say $35,000, and you could start with $80,000 with Apple. But again, tomorrow I'm going to teach you my lean AIM investing method, and that can involve buying as few as one contract and showing you how to do that. And then you just quickly go for a profit of 25%. So you can see if Apple just goes back to its price of about 3 weeks ago, you'd have a sell. Now I'm going to show you a trick on how to check the LEAPS performance for the last 6 months. Okay, Brett, go all the way across to the first column in the 175 row, and you see this, I call it LEAPS license plate. This is the way to find out how the LEAP itself for the 175 call has performed for the last 6 months, year, however long the option's open. Click on that. Okay, go all the way up to the top. Okay, now you are going to see how this LEAP has done since it was issued. Again, notice how it defaults to 1 day. I found a fair test because this option, hasn't been around that long. I like to see how it did for the last 6 months. So go across and click on 6M. Okay. Again, now put your mouse down, say over here, right near the end on the last mountain peak. Over here. No, further, right in there. Okay. Notice how on July 31st, this LEAP was at $43.25. Look what it's done in less than a month. It's gone from 43 to $30.50. So it's down about 25%. This is a great time to buy a quality option like Apple. Now, let me show you one other wild one here you get a kick out of. Okay. Go up to quote lookup here and type in TQQQ. Okay. Again, the nice thing about Yahoo Finance is they always default to the summary page, which is where I like to start. Okay. Okay, again, click on 1 year for this. Now you see how TQQQ is an electronically traded fund or ETF that mimics the NASDAQ 125. So it's a great way to play the technology sector, the Apples, Microsofts, Teslas of the world, and have a piece of the whole 125 top tech stocks in the NASDAQ. Okay, so scroll down again. Again, you'll see it's going to look just like the Apple one. Go down a little further. Okay, here we go. Now look at this one. You see a little wilder 52-week range. Look at this. The low is $16.10 and the high is $47. This is the kind of one we're looking for when we do AIM, because it's good to have 1 or 2 conservative ones and 1 or 2 highly volatile ones. One reason TQQQ is so volatile is because it's leveraged, which means if the NASDAQ went up 2%, this ETF would go up 6%. So, of course, it'll do the same thing on the flip side when it goes down. Okay, so I would recommend this one for anybody because it's cheaper to begin with. Okay, scroll back up and go to options again. Okay, again, you'll see they always use the same setup. They're going to default to the short-term option, September 1st, which we don't care about. Again, hit the down arrow and look for January 17th, 2025. Just what we want. Okay. Boom. Now, okay, we see the price is roughly 38. So let's start by looking at the 35.
It didn't take
which
that
is
time.
$3 in the money. That's right. Okay, scroll down to the 35. Now let's see what price we get for it. We might go to the 40 at some point.
Look at this,
The way
Jeff.
options work, the higher the strike price, the lower the option price, because it's more out of the money.
Hey,
And
Jeff.
all the strike price means is this: you have the right, but not the obligation to buy, if you buy one contract, to buy 100 shares of the stock at that strike price anytime before the option expires. A lot of investors do that because they don't want to risk spending a lot more money to buy the actual stock, and then it goes down. With the option, normally, and you'll see from this, okay, scroll down to the, what was it? I say the 35.
Jeff, do you hear me?
Yeah.
Look at this. In this window, it says January 17, 25. This says,
Okay, yeah. Redo the, you got to get out. Yeah. Click on anything else. Yeah. Click on, that's not what we want. Okay. Go back to the date. Go back to the date. Click on January 19, 2024. You got to clean that out. Okay. Okay. Now go back to the date and click January 25, and you will have fixed the problem. Okay. Why is it doing that?
maybe
It shouldn't do that. All
well,
right.
here it comes. Huh.
Okay, try 25 again. Double click it.
I guess the point is you have to watch the screen carefully, make sure it picks your choice, right?
Let's go to Microsoft. Try another one.
It's still reloading on you is the thing, Brett. You can see
Yeah.
it's spinning in the upper right corner.
It shouldn't do that. That's
I can't see it
Yahoo's
because I
fault,
have
not
my
mine.
Zoom controller. It still didn't load the right one. Is it still loading?
No, hit refresh screen.
No.
And you see it spinning at the top. And
All
see
right,
if that
let's
clears.
try it
Now,
one
that
more
brought you back to 2024 and try it again.
All right, try 25 one more time, and then we give up on it.
Yeah.
I don't know why it's doing.
It's active on my screen, but not on yours.
Okay, forget it. Go to Microsoft. We'll look at that one. I want to show you at least one more that works.
Something like
MSFT.
that. Well, I think we know what to do. How about, do you want another example, Jeff, or can we go to our presentation where we have some other details?
Yeah. All right.
Like the finding the 52-week low.
Anybody baffled by this like me, remember, we can always set up a one-on-one session, and I'll show you anything you want to know on this stuff, because it normally works. But like I said, technology hates me.
How about, can we go to the presentation, Jeff, and go back?
Yes.
Okay. Stop sharing that.
All right. I don't know where we're at here.
Now let me go.
Okay, let's pull up James's spreadsheet. That's what I want to show you, an example of a filled in AIM spreadsheet. Okay.
Well, I'll have to hand control back to you.
Okay.
And let's see.
And let me know, do I hit share screen now?
Now you're the host. So.
Okay. So I'm going to go to share screen. All right. Where's... Okay. Now,
okay.
All right. Let me...
No. Good.
I'm trying to open James's spreadsheet. I thought we put them in the folder at the bottom, but I don't see them anymore.
Did you open it? I don't see it as a choice.
No, okay. I'm gonna have to go back to the.
Here's what you can do, Jeff. Jeff, listen, please.
Yes.
Click just one of the other ones from your choice down there. No,
Okay.
in the
All
blue.
right. Nothing happens.
No, the other one, Jeff, where you had the 4 files. Right there, yeah. and just click any one of those. Oh, okay, here you are. Now you can, okay, stay here. Now go to File, Open at the top.
Yeah, okay, here we go, okay.
Yeah.
Okay, now I can do it, okay, great, okay. I know where he is here. This will show you the true benefits of AIM.
Hopefully this works.
Jeez.
Hmm.
What is the spreadsheet?
Wasn't it in your folder for the course files?
Yes, I clicked on it off of my computer.
Okay, go back down. It looks like that program might have crashed. Yeah, go back to that. Click that. Yeah. All right, do you see it on that list?
No, of course not. All right.
Well, let's hit no. Now hit recover selected because it crashed.
Nothing happens.
It's good. You have to be patient now. It's
Okay.
reloading. The program crashed, Jeff. So
Great.
because that's what happens with you. Right. Now hopefully this. Okay, click finish.
Let me string up. Okay, let me try pulling that one up again.
But yeah, just start with the folder you made. How about that? Right here, look here first. Don't click anything yet.
Okay. All right.
Go back to course files on the main part of the window.
Where's course files?
You just had it. Go back to.
One more.
Go back. Yeah.
There we go. Okay.
Now, do you see it here?
Yes, this is the one. All right. Finally, success. Let me show you how AIM works in the real world in a bull market. Notice a lot more numbers and things on this file than you saw when I showed you how the columns work. Let me show you the history of this one. I didn't write the date, but at some point, Jim, great guy, started with $65,840. Well, what I found from experience is you start with 15 contracts, and then when you get down to 10, that's really too few to do AIM with. And so you want to sell the 10, that would be your sell at the bottom of your spreadsheet. And then you're going to take that money, combine it with the cash that's in that spreadsheet, and use it to buy usually a little higher strike price and get back to owning 15 contracts. Okay. So Jim, in probably less than a year, went from 65,000, look at the portfolio value column, the last column, to 128,000 in probably less than a year. And then look how it grew through the next. Basically, look at it. We started this one on January 10th, 2020. And if you scroll down to the bottom, we're only looking at from January 2020 to August 2020, roughly 8 months. Look at how he did. And here's how you can see how AIM works, okay? Look in the contracts bought and sold column, and you see on February 24th, the price had gone down to $35. And you can see right above it, the price was $51. Even LEAPS on very successful stocks can go up and down sharply. Well, what do we do? When we looked up the price of $35, we had a $35 buy at the bottom of our spreadsheet. Okay, well, again, here's what you do with AIM every time. You see portfolio control was 58,260. Now, with the price of Apple at 35, the LEAPS value is only 42,000. So you would go 58,260 minus 42,000, and you get buy advice of 16,260. See how that works? Okay. Again, like I told you earlier, you look at, this is just advice. And in order to see if you have a market order, you take the 16,260 and you subtract the safe amount of 4,200, so that you are, again, saving money, because you're not selling 16,000, you're selling 10,500. And you will see very quickly how this paid off for you with even higher profits. So you do all the math on it, you make your buy, and then you update. And one of my tricks when I do AIM, right below the first row where you see you sold 3 at 35, you see right below it the same date and the same price. I call this the admin row. I use this row to update all the information I need to figure the next buy and sell at the bottom of the page. So here's how it went, okay? So you can see when you bought the 3, you owned 12 contracts. Okay, boom. Well, I go down to the admin row. The first thing I'm going to do is say, well, obviously, the number of contracts or options I owned has changed. How did it change? And you do this, you say, I own 1,200 options. I bought 3 contracts or 300 more options. So now in the row below it, now I own 1,500 options. You see how that works? And again, here's the trick I told you with portfolio control. Whenever you have a buy, you're going to take half of the buy amount and you're going to add it to the existing portfolio control. Well, I can do the math in my head. Half of 10,500 is 5,250. So I add 5,250 to 58,260, the old portfolio control. And now I have a new portfolio control of 63,510. Very good. Okay. Now, so I'm all set. Once I have done the second admin row, I can go down to the bottom and figure the next buy and sell, just like I showed you earlier. Okay. And now you're going to see how SAFE helped us. Look at this. 4 days later, it was in a bear trend. And literally from January 31st to the end of February, your Apple Leap fell by about 50%. So it went from 51 to 26. You see that? Okay. Now, we had looked at the bottom, and because we had already filled in the next buy and sell, so we knew we had a buy for 5 contracts. How did we know that? Okay, because earlier we had taken 63,510, the higher new portfolio control, subtracted 39,450, the value of the LEAPS, and that told us we had buy advice of $24,060. Now, because we didn't spend that 5,250, instead of buying it at 35, we bought that at 26. You see how we saved $900 a contract by buying at the cheaper price. Okay, and again, we do another admin row. Okay, so once we finish that first row, we would come down and say, well, we started with 15 contracts. We bought 5 more. So now we have 20 contracts or 2,000 options. Again, since it's a buy, we're adding half of the buy amount of 13,150, whatever that is. I can't do that in my head. So you'll see our portfolio control grows from 63,510 to 70,085. Boom. Now notice how grateful we're going to be for making these buys and doing AIM and following it religiously. Buy low, sell high. Well, at the end of the month, right after we made that buy, look at March 2nd. From February 28th to March 2nd, Apple LEAPS did an amazing bullish turnaround, and they went from $26.30 to $45. You see the power of LEAPS. I guarantee you the stock didn't go up that percentage, but the LEAPS will. And that was enough to trigger a sell for 2 contracts at $45. And here's the way to think of how does AIM work to make you all these profits? Very simply, think of the accounting term LIFO, last in, first out. That's the best way I can think to explain AIM to you. You bought 5 contracts at $26.30. A little over a month later, you're selling 2 of those contracts for $45. You made a $1,900 a contract profit on those 2 contracts you sold at $45 because you only bought them for $26. And now you can see when you go over to the column, you went from when you made your buy, you had your portfolio value was 99,000. You make that sell for 2 a month or so later, you've gone from 99,000 to 136,000 for a very nice gain. Okay, so now my buddy kind of went off on his own. That was smart. He decided to make a buy for 30 contracts when it went back down to $30 because he felt confident it was going to rally, and that's his choice. You don't have to do, AIM is not mandatory. You can only do exactly what AIM tells you. He had a hunch and he was richly rewarded. And you can see here on that buy for 2, you started with 2,000 options. You sold 200 or 2 contracts. So now you own 1,800. And you see, because it was a sell, portfolio control was 70,085 before the sell, and it's still 70,085 after the sell. And again, you see how you had sell advice of 19,000, but by subtracting out the safe amount, you're only selling 9,000. Okay, so my buddy bought 30. Well, did that pay off quickly or what? So you can see he went from owning 18 to owning 48. I cheated a little on the portfolio control for him because I didn't feel the need to completely up it. Well, look at this. He bought 30 at 30, and look at this. By merely going up to 22, by 32.35, it triggered a sell for 5 contracts. Again, you take the 155,280 And his cash went negative. You can see right here, his cash went negative. But he had plenty of money and he didn't mind going cash negative at that point. Okay, so let's see him get back the cash, some of the cash here. Okay. He 155,280 minus 115.85. He had sell advice of 40,195. And once again, when you subtract out the safe amount, he had a buy rounded off of 16,195. And you can see he went from owning 48 contracts to owning 43 contracts. Well, and you see the beauty of it. You see how AIM is constantly giving you buys at low prices, sells at high prices. Well, it drops again. The roller coaster goes down. Look at this. Okay, it goes from 32 to 20. Isn't he glad he sold those 5 at 32 before they dropped? So that's why I'm telling you, you've got to check your leaps every day, because you never know, if the gain will be there the next day if you don't act on it. So take the 5 minutes and do it. Okay, so down at 20, he owns 43 contracts, equals 86,000. Well, you compare 86,000, the leaps value, to the 115,000 portfolio control. Obviously, portfolio control is higher. So when portfolio control is on top, you think P for possible purchase. Very simple. So that's why you don't see parentheses. He had buy advice of 29,000, rounded off. I bought 20,000. So now you can see he bought 10. So he went from 43 contracts to 53. And then look, the golden age of Apple comes along. Look at the rest of this page. Sell 6, sell 7, sell 5, sell 5, sell 7, sell 4, sell 4. Look how the price, he bought it at $20 on March 23rd. From March 23rd to June 23rd, 3 months, Apple leaps go from $20 to $90. You think that's going to make you a big profit? Of course it will. So look what he did. When it was $20, his portfolio had a value of $67,655. Look where it is 3 months later. It went from 67,000 to 296,775. This is a real investor. This is my buddy Jim in Georgia. So you're not seeing the full benefit of AIM because right now we're in kind of a bearish market. But AIM will go crazy for you to making profits once we get back to a bull market, and it will happen. And so I'll scroll down. And he easily hit the AIM hat trick with, let's see, he had 1, 2, 3, 4, 5, 6, 7. He had 9 consecutive sells. Is that pretty impressive? Okay, so, and we wind up selling all of them because he got down to 10 contracts, remember, like I told you. So long story short, he started with 65,000 probably 2 years, 3 years ago at the most. I didn't write a date. 65,000. When he closed out this position, he sold them for $382,289. And I've got more than one example like this. I've got some bad examples too, but a few good ones like this more than make up for the bad ones. I mean, this is not totally typical, but I would say 25, 30% of all leaps have acted like this during a bull market at least. They go crazy, crazy good. Microsoft basically did the same thing if I showed you one of them. But I think you can see from this And that's why you don't see a buy and sell at the bottom, because we sold all of them at $153. So, and the beauty of AIM, go back to the top of the spreadsheet and you see we started with 58,000 in LEAPS and 70,000 in cash. Okay. In 8 months, the LEAPS grew from 58,000 to 153,000. So they went up. Look at the cash. Started with 70,000. You can see we had some negative months of cash with the parenthesis because he bought 30, boom. That's why I didn't change the portfolio control amount. And see, I'll be doing this for you if you hire me to manage your account. I know so much from 30 years of doing this. I can flawlessly move around and tell you exactly what to do at any point in time. And look at the cash again. Started at 70,000, grew to 229,000. Even though at one point it was negative 38,000. So again, AIM works for you flawlessly if you take a long-term view. That's what you have to do. That's why I tell people, give AIM 5, 10, 15 years. And this is the results it will produce. Now, I'll show you tomorrow, probably. I've got one spreadsheet for a guy, Mark Doherty, who went from 550,000 to 1,750,000 in 2020. So I made one investor a millionaire in 1 year when we had a bullish market. And this is what's interesting about this is he did this in the year 2020. If you check your memory, you will find 2020 was the year of COVID, when COVID came along to ruin our lives. And you'll find if you check the economic statistics, unemployment grew to like 15%. A whole bunch of factories closed down. All sorts of negative economic news happened, yet Jim became a millionaire. So a lot of times the stock market doesn't quickly or automatically follow the economic market. And that's why I encourage people to always be invested in the stock market, because AIM will take care of you completely with buying and selling at the right time. And as you can see here, you didn't have many buys, but all of those buys quickly helped you make a lot of money. And I mean, just quickly look, he bought 30 contracts at $30. He sold, he sold those contracts along the way at much higher prices. Much higher prices. So some of those 30 were sold at $60, $70, $90. You just got to realize LEAPS are incredibly volatile and go up and down very quickly and can make you profits very quickly, but you have to pay attention. And if you have me doing it, I'll nag you that you had to buy or sell, but then I can't trade it for you. I can't give myself the price you bought or sold something at. The only way you can fail with AIM is if you neglect to check your buys and sells. That's all I can tell you. I can do some of it for you, but I can't do all of it for you. So if I'm not asking you to sit in front of, thank you. Sit in front of your computer 8 hours a day and day trade. I'm asking you to sit in front of your computer for 5 minutes and see if you had to buy or sell. Isn't it worth it if you can go from 65,000 to 382,000 in 8 months? I think so. So I just wanted to show you a really good example of how AIM works in the real world. This is a real client of mine. Great guy, he's 83 years old, you know?
Okay, thanks, Jeff. That's a great example.
Okay,
So
I think it's time for a break.
let's we have a question, but I think this is a good
Sure.
Q&A portion. We'll open up, and then because we're going to be done in 20 minutes anyway. So
Okay.
So here's Ray and Nico asked, was the decision to buy 30 and 10 contracts triggered by a calculation? I'm not sure if those are two separate buys.
The 10 was a regular AIM buy. The 30 was my buddy Jim deciding on his own that he wanted to buy more because he really felt Apple was going to go up. You can do that at any time. And I have a friend, Reggie, who asked a question on that. Normally you do this. If you want to add more money to an existing LEAP that you own, the simple way to tell you to do it is this. Let's say you wanted to add 10,000 to an existing LEAP that you owned. You take half of that money and add it to your cash account, and you take half of the money, 5,000, and buy more LEAPS with it. Then I would adjust your spreadsheet, or you would adjust your spreadsheet, and then we keep doing AIM the way we're always doing it. So you're doing the same thing when you add cash to an existing position that you did when you initially bought the LEAP. You're putting half in cash and half in LEAPS. Let me let my dog out. Hold on. The joys of family life. Come here. You want to go out?
Okay, well, I think we can take any more questions from people now. You can raise your hand if you want to be unmuted. If people know how to do that. On the bottom, the Zoom bottom banner menu, there's reactions. And I think there's a way there to raise your hand.
Okay.
If you just want to talk, or you can type. So.
Can you hear me, Brett?
Bud? Yep.
Yeah, I was wondering, it's nice, all these calculations. Are you able to follow, of course, those calculations and put in a formula in these columns so that it minimizes the amount of math we have to do with the calculator, and maybe will tell you automatically what's a buy and a sell? Okay. Is that a possibility?
Yeah, that is a possibility. I've found with my limited Excel knowledge, which Brett will tell you, I could easily do formulas for about 5 or 6 of the columns on the spreadsheet. Some of them I feel are too tricky, but I think you learn AIM better for the future by doing it with a pencil and a piece of paper and a calculator. I never grew up with computers. I didn't see my first computer till I was 50. So I didn't, learn to feel comfortable with computers. And Claude is the wizard of all time on Excel. I got to tell you, you have not seen an Excel spreadsheet till you've seen one of Claude's.
Yeah. So I think there is a happy medium.
There's a happy medium, and Brett has a pretty good Excel spreadsheet that would work for most people. So if you would like a copy of Brett's spreadsheet, you can email me at jeff@jjjinvesting.biz, and I will let Brett know you would like his spreadsheet, and he can send it to you.
Well, actually, Jeff, because these people all paid for the course, I will send it to everybody.
Okay, great. Okay, so you will get a copy of Brett's Excel spreadsheet, and you're welcome to use it all you want.
Yeah. So, and let me explain what I've done is, Jeff, I've asked him many times to use a spreadsheet for a spreadsheet, not Microsoft Word, but he's more comfortable with Word. So what I do is I put it into Microsoft Excel, And for all the equations and calculations that are automatic every time, I put those formulas in the spreadsheet. So it automatically calculates, one leap equals 100 contracts. We know that every time, no matter what. So it fills that in. And it knows how to calculate leaps value. You just take your leaps price times the number of contracts, and that's your leap value, things like that. So I did also make some calculations to help calculate your next buy and sell. Those still need some judgment, and I'm still trying to make it look nice in a spreadsheet. So it doesn't really look like it's what I would call, prime time ready. But what I want to do, I will send everybody the spreadsheet with the basic formulas. And if anyone wants the spreadsheet where I did more work to actually help you calculate your next buy and sell, I recommend you just talk to Jeff and myself. You request that, and then we can provide that.
Because see, the hardest part about doing it with Excel, I've found, is figuring out the next buy and sell at the bottom of your spreadsheet. Because I take some considerations into effect. Okay. Basically, you could always do the sell at the bottom with Excel if you figured, roughly how to do it, because you don't have to do any modifications. But on the buy side, I came up with, and I go into this more tomorrow, I came up with what I call a bear buy and a super bear buy strategy, so that you don't run out of cash too soon when you have a market like we're having right now, where everything goes very bearish. And I'll give you the 2-minute explanation.
Well, Jeff, first, though, Jeff, before you do that, please, we have more questions. So let's go to those. Okay. Let's see. Westang, whoever your name is, sorry, I don't know your name, but they ask, how do you select your first vehicle or company? I think they want to learn more about that. So we do actually, when we go to...
Well, the first consideration you have to think about, there's two things to think about when you're buying. The quality of the company itself, and then there's the practical consideration of how much money do you have to spend. In other words, if you tell me you have $20,000 to invest, I cannot buy you 15 contracts of Tesla, because that would cost you about $150,000. Now, I've come up with a new way to do AIM that we'll talk about tomorrow, called lean AIM. And Claude's a good example of that. He used to own a bunch of shares of Tesla stock, doing AIM with it. And I convinced him, I said, Claude, here's a better idea. Let's do lean AIM with Tesla. So Claude bought one contract at the money on Tesla for $5,000. Now with lean AIM, it's the simplest thing in the world. Once you buy your contract at $5,000, I told Claude, okay, we'll immediately put in a limit sell at a price 25% higher. So we put in a limit sell at $6,500. In 1 month, Claude's Tesla Leap went from 5,000 to 6,500. So it automatically sold and gave Claude a $1,500 profit in 1 month. So I advocate, and when I wrap everything up tomorrow, I advocate, just like with maybe cars, have a hybrid, have a couple regular AIMs and have a couple lean AIMs for the stocks you can't afford to do regular AIM with. So, I mean, personally, I think everybody should own at least 1 or 2 contracts on Apple, Microsoft, Tesla, and there's several others. And what you couldn't afford maybe to buy 15 contracts and have half the money in cash, you can afford to just buy one or two contracts on Tesla, Microsoft, because it's only going to cost maybe $2,000 or something to buy one contract of Microsoft at a very attractive price at the money. And
Yeah.
we go for that. And then again, every time, I don't think I got to do my compounding bit here,
Right.
but get this, if you start with $1,000 and you could average one sell a month with lean aim, and that's a fair representation because luckily I got smart in my old age. And once I did the very first lean aim sell in April, I made a copy of every single sell from lean aim and put it in a binder. I now have a binder in the last 4 months of about 85 sells, making investors a profit of $200,000 on those lean aim sells. And the average time to make the sell is about a month. So I found if you compound $1,000 at a 25% profit rate 10 times, 1,000 will grow to 9,700 without you ever putting more money in. So the secret of AIM investing is compounding prior profits into future profits and build it up for your retirement, or say your kids are going to college in 10 years, boom, you'll have the money to send them to college, regardless of how ridiculous tuition rates are. And you will not need to have the hell of going through of a student loan, which is still angering me from my personal life earlier with my daughter. So I'm trying to help you avoid the pitfalls of endless debt for things that you need, like a house, a college education, a car. I want you to be able to pay cash for everything. So that way, if AIM's making you 100% and you can pay cash for everything you need, guess what? You're making even more money because you're not paying those ridiculous interest rates, So I tell people, AIM is the greatest way to invest for people who couldn't start when they were very young. And so it will have, like you saw with my buddy Jim, he went from 65,000 to 382,000 in 8 months. I guarantee you that would pay for college tuition at most schools, even private schools. So what you got to think about is when you invest, you've got to factor in a lot of things that you don't normally think about. First of all, you got to factor in inflation. If inflation is 8 to 10% and only going to stay there forever, don't you think you need to make more than 8 or 10% a year on your investments, or you're actually losing money? Of course you are, So that's why, if you have 500,000 in a CD that's paying 2%, you're making the bank money. You ain't making yourself money. So you got to think about that. You got to look out for your own financial future. I mean, granted, there's a little more risk with LEAPS, but the reward to risk ratio is so incredible, you got to do it. And I have proven through the years, I've made people over $10 million sitting in my sunroom with no shoes and no shirt. It works. You can trust me on that. You can read my books and see examples. You're seeing examples in this course. And it's not going to change. This is going to work forever. But only if you do it, only if you sign up,
Okay,
again,
so Jeff, thanks a lot. We have more questions about how to pick your first LEAPS.
Okay.
I think because we had the issues with sharing the screen with Jeff and Yahoo Finance, we have more screenshots we can show tomorrow, which we will. We have an algorithm, basically, your some bullet points, your guidelines to help pick your first investment. So we will go into that more tomorrow. So we'll start with that tomorrow.
Yeah, because we'll have extra time tomorrow.
So we'll definitely come back to that for everyone. Okay. because I think, Jeff, that is a big concern, is just how do people get started?
Right.
How do they pick the first one? So,
Well, what you got to realize is, AIM is always trying to hit a moving target. If with a lot of people who sign up for my management services, I will give them the 2 or 3 leaps that I like right now. But I tell them these prices are only good for a day or two. Otherwise, don't use these prices 2 weeks later, because they might be horribly wrong. So if you don't act on a recommendation I give you immediately, then call me back up and I will change my recommendation. And I always tell people, I don't really want to give you a leap to buy and a market price to buy it at unless you're going to buy it the next day, because it could change radically. Now the good thing about that is I've had several people. AIM is very forgiving. I've had several people, including Brett, who didn't say a sell the day I told them to do it. Well, luckily for them, the price stayed higher than their sell price for 2 or 3 days, and we got to sell 2 or 3 days later. That isn't always the case, but I've never seen a way of investing that's so kind to you that you can still make profits when you ignore what you should have done the day I told you. So it's a great way to do it. But again, timing is everything with leaps because they're so volatile. You have to use the pricing information the same day, literally, you decide to buy the leap. Don't wait a week or a month or you're going to get hurt.
Okay, Jeff, great, thanks. So we have a couple questions from Sonia. I'll read them off. First one is, she's reading Robert Lichello's book now. When she's done with that, which book of yours do you recommend she reads next? Or your first one or your third one, maybe?
Of course, I'll send the free book. Now, I would say the best written book, and because of Brett's wonderful editing, is Aim for Millions. Now, it was initially designed for very rich investors, but all of you will become very rich investors if you faithfully follow AIM. So I would say that's the best one written. It's the clearest and the easiest to read for new AIM investors.
Yeah, I would agree also. We spend a lot of time to make good step-by-step visual instructions with AIM for Millions, with stock options, with the spreadsheets and the formulas. We type out their calculations, and it's really step-by-step.
It's easier to read than the Yachts book because it's 8.5 by 11, the size of a standard letter, page.
And it's right there on my shelf behind me. You can see it on the shelf there. So yeah. Okay, she also asks, let's see. Will we find out about your services, what that encompasses?
Oh, yes, I will talk about my services tomorrow when we wrap up.
Yep.
But frankly, maybe I'm biased because I'm good at this. I think all of you would benefit by having me help you with AIM for a year. Now, here's the good example of that. My friend Mark, who made the 1,250,000 in 2020, he started off in January of 2020 with no knowledge of AIM. By July, 6 months later, he felt he knew AIM well enough that he did all the rest of his investing from July through December by himself and still made 1,250,000. So AIM is easy to learn, but there's a lot of tricks that you need. And I tell people, think of AIM as like backgammon. I learned to play backgammon in like 2 hours and actually won a tournament after I had spent 3 days learning backgammon over people who had been playing for years. Why? Because AIM is very similar to backgammon. It requires some skill, but it also requires some luck. So I just happened to get all the right rolls of the dice when I was playing the backgammon tournament. So I was able to beat people who were much more skillful than me. So I can teach you all the tricks you need to learn about AIM, and you will encounter real world questions just like what you're doing now. And I'll be able to answer them directly to your portfolio. Now, if you can't wait for information on my services, I will just write me at jeff@jjjinvesting.biz, and I will send you information on my services and low rates right now, today even. And
Okay, but we'll show you that tomorrow. And
Yeah.
I do want to question you or push back a little, Jeff. I don't AIM, you said it requires luck, or not requires, but it might involve luck, but I think it's more just a matter of time. If you do it for a long time,
Right,
you'll learn,
I mean,
and you'll benefit from it. So
you can only fail at AIM if you don't give it a lengthy chance to recover, because the history of the stock market is just like a roller coaster. Stocks go up, stocks go down, and stocks go sideways. And you have to allow for the cycles to play out. I studied the history of the stock market. Here's the best indication of how the stock market works. About 50% of the time, the market is bullish. About 30% of the time, the market is bearish. About 20% of the time, it goes sideways. So what you got to realize is you're priming the pump when you buy those stocks during the bearish cycles, and maybe 6 months, 8 months down the road, they're going to turn around, just like you saw on that example with Apple. You know, it sure paid off for Jim to buy those 30 contracts at $30, when less than 6 months later, they're $250 an option. So you got to realize the power of LEAPS. So I would suggest to a lot of people, test a lot of LEAPS. Go to Yahoo Finance, look up a LEAP you're thinking about, do that LEAPS license plate bid I showed you, highlight your mouse over the LEAP, and you can quickly go between the peaks and the valleys. And you can imagine every time you see a peak, think I had a sell here. And every time you see a valley, I had a buy here. And you get a good idea of how your option's going to perform after you buy it.
okay, great. Well, I think we are a little bit past our time today. So thank you, Jeff. Thanks, everyone. Hope this was valuable.
I really enjoyed this. And again, we will answer all of your questions anytime, Again, anybody's welcome to, phone me, and I talk better than I type, as you can tell with the arthritis. So,
okay. Let me also explain to everybody, we aren't going to send out any files today. We're going to wait till the course is over tomorrow, and then we can package everything together. We might clean up some things for you also, but also tomorrow the link will be different. So look for an email. I'll send it out tonight, and then I'll also send it out an hour beforehand tomorrow, like I did today. It's a different Zoom link, so just wait for that. And if you have any questions, think about them, bring them for tomorrow morning. But we'll just pick up where we left off. We'll start again with the how to pick your first LEAPS,
right.
And because we had a little technical issues with that today, so we'll start with that again and move on with the rest of the agenda. Okay.
I thank you all for attending, and I look forward to seeing you all tomorrow.